Hi everyone, I'm John Zaller, CIO of MAI Capital, here with the latest edition of the MAI Market Update. This month we're taking a brief look back at performance in 2021 and then spending the majority of our time looking ahead to the outlook for 2022 and beyond. Well, 2021 was another terrific year for equity investors. In fact, it was the second year in the past 3 years that the S&P 500 returned over 25% on a total return basis. Considering all the hurdles the market faced over the course of the year, including the Delta and Omicron variants, the widespread supply chain disruptions, and the fastest inflation readings that we've seen since the early 1980s, it's another great reminder that as long as monetary policy remains accommodative and the economy and earnings continue to grow, the market tends to climb the wall of worry. As we look ahead to 2022, the outlook is becoming more complicated. On the positive side, we expect real GDP growth to remain above trend at 3 to 4%, and S&P 500 earnings growth to approach 10% year over year. We think COVID will be increasingly in the rearview mirror in terms of market impact, despite the near-term surge in Omicron cases. The risk of tax increases is now seemingly off the table, and U.S. consumers are in very good financial condition and spending at record levels. On the negative side, inflation readings have remained stubbornly high, and we don't know how long that will last. While the well-documented supply chain shortages now appear to be easing, wage pressures are building throughout the economy. Whether or not inflation subsides in 2022 will play a significant role in the direction for interest rates, profit margins, and the valuations that our investors are willing to pay across asset classes. As shown in this chart from Strategas Research, there's been a fairly strong correlation between higher inflationary regimes and lower valuation multiples in the equity market. While we're not expecting a return to 1970s type double-digit inflation, even 3 to 4% inflation could be disruptive to markets after 2 decades where deflation risk was the primary concern. As long as earnings continue to grow, which we think they will, as indicated in the chart on your screen, the investment environment for equities is likely to remain favorable. However, we would become more concerned if growth begins to falter and inflation stays hot, which could happen as financial conditions tighten heading into 2023. In summary, we believe investors can still play offense for now, but we're entering 2022 with a bit more caution as the cycle matures and the Fed begins to take inflation more seriously. In this type of environment, we still think that equities can move higher and that companies with strong brand recognition and pricing power will likely be in high demand. At the margin, and where suitable for the client, income-oriented alternatives still look favorable relative to bonds for the enhanced cash flow production as well as an uncorrelated return profile. We're also increasingly interested in real asset alternatives such as real estate and infrastructure, which tend to offer some protection in a higher inflation environment. As always, our forecasts and tactical views are a distant second to your goals and objectives in the way that we construct and manage your portfolio over time. At MAI, we believe that a customized, diversified, patient, and tax-efficient approach to investing that puts your goals front and center positions you the best to actually achieve those goals over time. In a world that is increasingly enamored with the speculative and often confuses investing with gambling, we believe this tried and true approach that plays the long game, while it's temporarily out of style, is ultimately the best way to achieve long-term success in the markets. As always, we value the confidence that you've placed in us as your trusted advisor, and we'd encourage you to reach out to your wealth manager at any time to discuss your portfolio in more detail. With that, we wish you and your family a happy, healthy, and prosperous 2022.